Welcome to another S&P 500 analysis. Today is March 26, 2022. The S&P 500 continues to whip higher from the March 15 reversal, and it is at a critical juncture that could reverse the recent rally or whip to all-time high. In this video, we will review the market sentiment, the internals, the price action of the indexes, the 10-year yield, the oil, gold, and silver market, and also some of the FANG stock like Apple, Tesla, and some home builder stock to see what they might be telling us. Stay tuned. Before I begin, I need you to take a moment and click the thumbs up to help me promote this video on YouTube. Now let's take a look at this weekly chart of the S&P 500. For the week, the S&P 500 gained approximately 80 points, or 1.8%. The range have contracted to only 122 points. Last week, it was above 300 points. And this could be a sign that the rally might getting tired, or it might just be taking a pause to gather strength for the next move higher. And looking at the price action, the weekly price is above the 10-week and also the 40-week moving average. But it is below the price channel, and also it is still holding this lower high and lower low price pattern, although it is still one time framing up. But based on the technical, the trend is still down on a weekly basis. Let's take a look at this sentiment chart and see what is the state of the market participant. Now, for those that are unfamiliar with these market generated information that I am about to review, then go watch my video on 7 key market indicators, where I explain what each one of these indicators represent. I have also posted a link in the description below. As far as I know, this is the only channel on YouTube that review the market internal and the sentiment in their entirety and in their original form, not those that have been distorted by some mathematical equation. So if you are serious on monitoring what the market is telling you and to get an unbiased view on the market, then click the subscribe to this channel. Now, looking at the VIX, we see that it has been moving back into this 20-30 zone, and it closed at 20.81 for the week. We'll be watching to see if it will move out of this zone and dip below the 20. So far, market participants are getting less fearful. Looking at the put-call ratio, it was below 0.75 throughout the week, and it closed at 0.67. Definitely, market participants have been putting on risk. And looking at the up-down volume ratio, the up-down volume ratio show modest strength on the up days and pretty much neutral on the down day. Overall, the up-down volume ratio was a little bit more than 2-to-1 on up days, so it is not a sign of strong buying. The daily advanced decline also is not showing broad market participation on the upside or on the downside. Furthermore, Friday 23-point gain from the S&P 500 only accompanied by 90 more advancing issue over the declining issue. That is a very neutral market. It's like 50% of the stock are up and the other 50% are down. Even the new high, new low was neutral throughout the week. It finished the week with 17 more new low than new high. On the New York Stock Exchange cumulative AD line, we are still waiting for this negative divergence to get resolved. So this implies we could see a lower low when that occurs. Looking at the Nasdaq internal, the up-down volume ratio actually got lower as the Nasdaq 100 index got higher. This is a sign of lack of buying pressure on the upside. Similarly, on the daily advanced decline, number of stock advancing over the declining stock did not expand as the Nasdaq 100 moved higher. The new lows still outnumber the new high in the Nasdaq market, not a sign of a strong market. And the Nasdaq 100 appears to be running a little bit ahead of the Nasdaq cumulative AD line, another sign of lack of market participation on the upside. So what are the sentiment and the internal telling us? They show us the market participant are putting on risk, but the market rally seems to be running out of steam as the advanced decline is not expanding as the market is moving higher. Same goes with the up-down volume ratio. No sign of strong buying pressure as the market moves higher. Now let's take a look at this daily chart of the S&P 500. Couple things to note here right now on Friday, as of Friday's close, The S&P 500 is only a little bit less than 6% below the all-time high. Remember back here, it was basically a little bit over 10%, and it was in the correction territory. And you can see it snapped back pretty strongly ever since the March 15 reversal here. Okay, so right now we're basically looking at this Fibonacci retracement that I have put on, and I'm using this swing here from the all-time high to the February low. And right now it is sitting right near this 618 retracement. So this could be a reversal and work itself back down, or it could break above this 618 and then move up toward the all-time high. So essentially it is sitting at a critical junction right now, right? Based just like the title said in this video, because it's sitting at 61.8, which is one of the level Fibonacci retracement level that we likely see a reversal, okay? And also is sitting right up in confluence with this pivot high somewhere near the 45.85. So the key things to watch for the coming week is that will we get a reversal down and then chop around at the 50% level and then move down below the 38.2. And if it does in the coming week or in the coming day, when we move below that 38.2 retracement, which would be somewhere around 43.83, then watch for this thing to move all the way down to this 41.14, which will be testing this February low. Now on the upside, we basically could see if it come up and break out of this 618, then look for a move up to this 47.50 area and see would it be able to take out this pivot high. And if it does, then all of a sudden the market will be staring at this all-time high. Looking at the Nasdaq 100 daily chart, we can see that the Nasdaq 100 is sitting right near this 50% retracement. And that is based on this particular swing here from this high to this low. So right now we're basically keeping an eye on it to see would it continue to push up to this 618, which would be near the 15,345 area, or would it reverse back down and come down and test the 38.2 somewhere around 14,390. And if it breaks below this 38.2, then we'd be watching for it to make its way down to this 13,000 area, essentially testing this low down here. And also notice that as of the Friday's close, it's only a little bit under 12% from its all-time high. Now looking at the Russell 2000, we see that the Russell 2000 is still in the correction territory. It is slightly more than 15% from its all-time high. So right now it is still in the correction territory. And we're basically looking at this balance area or this nice little flag here. What I did is I did a little bit of a projection and put a 100% projected move. So if it break below this 1935, then we would be watching for this 1748, which would be in confluence with this 1725 and essentially this pivot high here. And for the Dow Jones Transportation, the Dow Jones Transportation is only 10% below its all-time high. And I have also put in a Fibonacci retracement based on the all-time high and this low here. And right now it is in between this 50 and 618 retracement area. So we'll see would it be coming up and take out the 61.8 and move up to this all-time closing high at 17,039.38. Or will it reverse back down below the 50% and start testing the 38.2, which would be somewhere around 15,700. And if it breaks below that, then we're essentially looking for a retracement down to this low near the 14,133. And looking at the Dow Jones Industrial, you see the Dow Jones Industrial is only slightly 6% below its all-time high. And right now it is sitting above this 50% retracement based on the all-time high and the February low here. So for the coming week, we want to keep an eye on this to see would it be able to come up to this 61.8 and move above that. And we be watching for this 35,625, essentially this pivot high here. And if it is unable to get up to the 61.8 and move back down below the 50% level, and that would be 34,612, and watch a test of this 38.2 down near the 34,000 area. And if it break below that, then we'd be watching for it to come back down and test the February low somewhere around this 32,272. And here's the broader market index, the New York Stock Exchange Composite. As you can see, it really made a nice recovery. It's been the strongest index so far. Right now, it's only slightly under 4% from its all-time high here. And it is getting back up to the upper edge of this, this basically this consolidation of balance zone. And, watch this 16,932. If it could get above that, then we be, keep an eye on this possibility of another play on the all-time high. But right now, essentially the 16,932 is the critical level to watch. If it is unable to get above that, then we basically are looking for a reversal back down to this 16,094. Looking at this 10-year yield chart here on the weekly basis, as you can see, remember this cup and handle that we've been talking about, this big one. Here's the 618 projection at 25.44 or 2.5%. And we also have the smaller cup and handle. On this one here, the major move at 100% is 2.4%. So we've basically been targeting this 2.5% range here. And as you can see from last week, it closed at 24.92 or 2.49%. So it's getting close to that 2.5%. We're going to continue to watch this 10-year yield. Most likely it will come up and take out this 2.5 and move up to this 2.75. And remember what I said last week about the 50 basis point and also in between FOMC meeting. There could be some rate hike coming in between meeting. And as you could hear, or you might have seen and read on the news, that a lot of these Fed talking head last week already kind of hinting to the market, trying to condition to the market to be prepared for 50 basis point increases to come. So the next thing is after the next increase of 50%, then they will try to condition the market to be prepared for in between FOMC meeting rate hike, because they really have to get this thing up to control the inflation, because they know inflation is still running wild. And looking at the US dollar, we see that the US dollar is trying to get back into the zone here at 98.8. And I wouldn't be surprised that we'll see it come back in sometime next week and possibly make a move toward this 101 level. So keep an eye on the dollar as the interest rate continue to move higher. And for the crude oil, as you can see, after it had came up to this close to this 130 area a couple of weeks ago, it pulled back and now it is moving back up and seems to be trying to get back to test this 130 level here. And if we take a closer look, I also put in a Fibonacci retracement here, and as you can see that right now it is sitting above this 38.2 retracement level. So we'll be watching to see would it come back up to this 131 level here, or these between 130 and 131 area in the coming week. And looking at this weekly chart on silver, you can see silver made a nice move a couple of weeks ago and peaked out at 27.5. Then it pulled back, and right now I have a Fibonacci retracement on that peak and this low here, and essentially is sitting somewhere around this 38.2. So we're going to see would it be able to push up and move back above this 27.5 and possibly move up to this 29.5. That's basically the target that I've been keeping an eye on. And on this weekly chart of gold, you can see gold really spiked up a couple weeks ago above that 2,000 level. It's sitting at the 2,078.80. Then it pulled back, and this is a pretty excessive type of high here. And once it pulled back, it came down to this 61.8, and now it seems to be testing this 38.2 at 1964, 1965 area. So we're going to be keeping an eye on gold to see would it be able to move above this 1965 and make another push for this 2078 level and possibly get up to this 2113 area, essentially this high. So that's basically what I'll be keeping an eye on for gold. And I don't think gold, this move on gold is done yet, even though this candle is pretty bearish. But based on this bounce back, I believe that gold will have a little bit more upside to go. Now let's take a look at the S&P 500 ETF, the SPY. As you can see, it is sitting right underneath this 61.8 retracement at 453.49, and also just right above this composite volume point of control at 450 area. So for the coming week on the upside, I'll be watching to see would it be able to get above this 618, essentially get above the 453.5 and come up to this 457.62, essentially these highs here, and essentially get into this little bit of a high volume zone. So if we could get above that, then basically that's what I'm be watching for is this 457.62, and see we'll get a rejection back down for the point of control here. Now also the other thing is we'd be looking at this value area high of this composite, and if it come back down, then we're essentially looking at a look above and fail. Then I would be watching for a retracement all the way back down to this value area low here, somewhere around 423.82. Now of course it's not going to take place in 1 week, but in a little bit more in the intermediate term, then I'll be looking for that retracement all the way down to the other end of this value area, this composite value area. The other thing is it could also get rejected at 618, or just come straight down and test this 50% retracement at 445.31. And if it's unable to hold this level here, then I'll be looking at it to come back down and test this 439, which would be another high volume node here. And notice that this 50% retracement is also in confluence with this high volume node. So we'll be watching for that on next coming week to see if it come down. Then we're basically watching for this 439 and possibly this 437 at 382 level here on the retracement. Looking at this QQQ, the ETF for the Nasdaq 100, as you can see, the close on last Friday is sitting right underneath this 50% retracement near the 361. And this is the retracement based on this swing here, this low and the high up here. Okay, so right now we're basically looking for the upside to see would it be able to get above the 50% level and come up to this composite value area high at this 365.53 and see would it get rejected back down, or even if it come up to this low volume zone here somewhere near the 370, or possibly get up to the 618 at the 371.30 and see would it get back and get rejected back inside of this value area. Remember, based on the video on some basic trading strategy using volume profile that I have discussed some of the strategy, and one of the strategy and one of the setup is look above and fail. And if we get that setup, then we essentially are looking for a retracement all the way back to the other side of the value area. And in this case, if it come up and get above this 365.53, and come back in, then we basically have a look above and fail. Then we'll expect it to come down and test the point of control here, then move itself down to retrace all the way back down to the value area low. And in this case, it will be somewhere around 328. And here we are looking at the IWM, the ETF for the Russell 2000. I have a Fibonacci retracement set up based on this swing here. And as you can see right now, it is sitting right underneath this 50% at the 207.5, and also right underneath this composite value area high at 207.26. You see it came up and then it came back in. So technically you could say that it is doing a little bit of look above and fail. So right now I'm basically watching to see if it continue to reverse back down, pick out the 38.2 retracement at 202.90 and come down to the POC of this composite volume profile somewhere around 199.38 and chop around here, then it moves itself down to this 194 area at this value area low. So that's basically what I'd be watching for the IWM on the downside, unless it could come back up and get above this 207.26 and move above this 50% level and see could it get up to this 618 at 212.15. So those are the level on the upside to keep an eye on and see what it be able to get above that. There is this low volume node here somewhere around 210. So we could see a little bit of a rejection and push us back in and get back into this value area. And once again, we basically are looking at that look above and fail type of a setup on the volume profile. And that will sort of give us a clue of what are some of the levels to keep an eye on. So as you can see right now, the S&P 500 is sitting near a critical point here, sitting right underneath this 618. And if it could break above this 618, it could move up and try to tag the all-time high. But if it reverses back down, it also could come down and test the low from February 24th. But the key things that we need to note is a couple stocks that could make a big influence on the S&P 500 and the Nasdaq 100, the direction where it might be headed. And these two stocks are Apple and Tesla. So we're going to take a look at these two stocks, and then also we'll take a look at some of the home builders and see how these home builders will do and what to expect under this environment of rising rate. Okay, in this segment, we're going to take a look at the stock Apple, Tesla, Pulte Home, Toll Brothers, D.R. Horton, and also Lennar. Now, in this segment, I'm going to use the fixed volume profile from TradingView, and I have put out a video on how to use that, and I will put a link on the description below, and you can check it out. Basically, I'm using this to illustrate how we use this fixed volume profile here, the fixed range volume profile, and to get a composite to take a look at some of the high volume node and the low volume zone to identify some potential support and resistance level. And if we start off with Apple, as you can see on Apple here, I essentially take this high and all the way to the most recent price, these price range to set up this composite. And you can see that we have this value area here from this composite. And right now, Apple is getting close to this value area high here. So it's basically, I have a level mark off at 176.61. These are not exact, okay? So these are just approximate levels. Just keep an eye on it because we're not talking about specific level. We're talking about a zone. So even though I have a 172.80 here, you need to take a look at it in terms of zone here. Okay, there could be more than just that one level. It's just that level should trigger some attention to keep an eye on the price action. Okay, so right now we essentially are looking for Apple to see would it be able to come up and break out of this value area here. If we could break out and move up above this 176.61 and get to this low volume zone here, then we'll be watching this particular level here, 180, this high volume zone here. Okay, but if it come up and reverse back down, or even just come up and reverse back down, so there are three scenarios for Apple to come back down. All right, one is to break out and come back in. That's one scenario. Right, one is just come up and bump up to that value area high and then come back down. And the other one is just come down from where it left off on Friday. Okay, but in regardless how it come down, keep an eye on this point of control here. That would be 172.80 at the current time. Now that could change as the price move. Okay, so right now we're basically looking at this 172.80, and if you come below this, then look for these retracement, these high volume zone, and then see would it get a bounce off of this 165.5 when it get down to this low volume, little bit of a low volume area. But if it doesn't, we're essentially looking for this thing to come all the way back down to somewhere around this 162 location here. So we'll basically be watching for that. And if Apple reverse, S&P 500 and the Nasdaq 100 will also reverse. But if it goes up, then we're basically looking for the possibility of the S&P 500 to move up for all-time high, because as Apple is relatively close to its all-time high here. And here we are looking at Tesla. As you can see, Tesla bump up against this 1037.94 or 1038 level here, and then it pushes back. So right now it's sitting right underneath this 61.8 or 0.618 retracement here at 1014 area. We're watching to see would it be able to continue to push back up and get back above this 1038 level here and push higher and get up to this low volume zone somewhere around 1115 level here. But if it is unable to get above this 1037, 1038 and then reverse back down, then we essentially keep an eye on this 50% retracement at 954, because that is pretty much in confluence with this value area high on this composite volume profile. And if it come back in, then essentially we are looking at this look above and fail, and we're basically looking at all these levels coming back and trace all the way back down to this 775 area. Okay, so that's basically what we are looking at. But if it could push up and get above this 1038 and above this 1115, then essentially we are looking at this high here at 1200 level. So, but that would be a long way to go. We basically need to clear this hurdle here at 618 at this 1014 level. So that's critical to watch and see how it come back in or would it move back up. And that would also dictate the direction of the S&P 500 and the Nasdaq 100. Now let's take a look at the home builders, starting off with Lennar. As you can see, Lennar kind of came down here and start building a little bit of a base. And what I have done is to treat this as a little bit of a flag and use this as a flagpole. So when I make a projection on this 100% major move, then it will bring this thing down to 61 and 3/4, somewhere around 61.75 area. Okay, so there are a lot of these high volume node and also high volume zone that we need to keep an eye on, that it could be potential target and also potential support level. So right now it's sitting right near this 83 level here, and if it breaks, then we're basically looking at this 78.58, 76.23, and all the way down to this 80% major move somewhere around 67.81, and 100% major move of 61.72. As you can see, the home builder is already, this home builder is already start breaking down once it broke this trend line here, and it's trying to consolidate here. but it is getting back inside of this value area. Okay, so we're basically looking at this massive, look above and fail. And if once it come back in, then we're basically looking for retracement down. And here is the point of control, this composite point of control somewhere down at 41. And here looking at DR Horton, also you see DR Horton also broke this trend line here, and it is coming down, and it's again, it is also building a little bit of a consolidation here between 88.60 and 77.76 here. So watch for this thing to continue to move down to the 70.91 and eventually get down to the 61.71 at this low volume area and see would it get a rejection back up. But if it doesn't, we're basically looking for possibility of coming back down to this 56 area here. And this is basically the value area low of this composite that I have drawn up here. All right, so right now it's essentially trying to retrace all the way back down to the other side of this composite value area. And looking at toll butter, again, similarly to the other two that we have looked at already, it broke this trend line and it is start coming down. And right now it's sitting at 49.11. We continue to watch this thing to come down and test this 44.84, this high volume no, and eventually come down to this low volume zone here at 40.74 to see will we get a bounce back up. But eventually I'm looking for this thing to make its way down at this 28.29 level here at this low volume zone here. So because right now essentially it is also trying to get back inside of this composite value area. So again, we're basically playing this thing as a look above and fail. And if it does perform that way, then we're essentially looking as the first target is this point of control here somewhere down at this 22 level. So there is a possibility to looking to see it come down to this 28.90 area. And here's Pulte Home. A little bit of a disclosure, I do have a short position on this particular stock here. So right now is essentially is coming down and it's sitting right near this high volume no here, 43.80. And I'm looking for this thing to come down to this low volume zone and see would it get a little bit of a bounce and eventually move down to this 35 level at this high volume no here. Because ultimately this composite point of control is somewhere around 25. So conceivably it could come all the way down to this 25 and possibly even lower, because it did come inside of this, dip back inside of this value area here. So it's essentially it is doing a little bit of a look above and fail. So right now I'm basically targeting this thing down here at this $40 level here at this low volume zone to see would it get a rejection, get a little bit of a bounce back up. In summary, the index is sitting near an inflection point where it can rip higher and back toward its all-time high, or it could reverse back down to test the February low. The two stocks that have a lot of influence on the direction of the S&P 500 and the Nasdaq 100 are Apple and Tesla. They are also sitting at a level that can propel them to a recent high or push them back to the recent low. With the Fed starting to be more hawkish on rate hike and start reducing its balance sheet, the market will start to reprice for a quicker and larger rate hike and look for further correction on those large cap tech stocks that are still elevated in market cap, and further downside on those interest sensitive stocks such as the home builders. I hope you find this video to be informative and be sure to click the thumbs up to help promote this video. Thank you for watching and stay safe.